In today's video, we're going to be discussing why TSLY is quickly becoming an obsolete dividend vehicle for me. TSLY is the high yield dividend ETF by Yieldmax that covers TSLA. Okay, it has a huge dividend and it helps us earn what we earn, which is over $200,000 per year in dividends at this channel. Okay, also our performance and value shows that we're not just getting $200,000 per year in dividends at a cost, we're still outperforming the market. We're up 6.96% right now. Now the S&P is up 7.7 and the Nasdaq's up 8.4, the Dow's up 3.7 and the Russell's up 2.4. So we're beating the Dow, we're beating the Russell, we're beating the S&P yesterday, and we're beating the Nasdaq the day before that. They keep jockeying for position, for leadership position as the market rally broadens to other sectors. That's why the S&P sometimes is beating the Nasdaq this year. But we're going to be beating the S&P after this month's dividends. Well, after Cornerstone's dividends come in a few days, like in 1 or 2 days here, and also Defiance dividends. Because look, if you see our Defiance dividends, Defiance, it pays us, $3,000, $2,000, and $3,500. So that's about, $8,000 plus the $5,000 of Cornerstone dividends. That'll be $13,000, which not only does that bring our account up by $13,000, and not only does it knock down our margin debt by $13,000, but that'll bring our account up by a few basis points, of percentage points. So what I'm saying is for every $5,000, that's 1% in my account roughly. So if I bring in, $10,000 with dividends, a little over 10, that's 2 more basis points of performance. And so this is how you guys keep track of your performance. Okay, you make sure that you're always factoring in your account size with the amount of dividends that you're going to earn. Okay, so that'll get us back ahead 2 basis points above the S&P and just under the Nasdaq, which is where we want to be. We want to be in between the S&P and the Nasdaq. We want to be in between them because we want to do better than the S&P, but we don't want to fall by the amount of the Nasdaq if the market should correct. Okay, this is how we live the FIRE lifestyle. Okay, financially independent, retire early. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. Okay, so the first thing that I have noticed about my account, all right, is especially when it comes to TSLY and Yieldmax funds, is that there are other alternatives now. Okay, so that's why it's becoming obsolete for me. First of all, you have YMAG, which is really, my preferred choice, my preferred investment vehicle for Yieldmax, because it's a combination of stocks. And as you know, at this channel, we use margin to get ahead. For every $1 you put in your account, you get $4 of purchasing power. So anyone can do this. All right, and you can too. So I just use a fraction of that. Okay, if you see my margin leverage down here, it's $230,000, and again, my dividends will pay this back in about 1 year, and I'll be left with all these dividend-paying assets to myself that pay monthly cash flow for life. They qualify to banks for loans. That's the key with dividends and living the FIRE lifestyle. Okay. Trading gains don't work, Bitcoin gains don't work, so you have to have these growth funds, but in the form of dividends, if you really want to not only get ahead and outperform the market like I'm doing, but you also qualify from banks. Okay, so this is how I get a house, a car, even personal loans to level up my account. And again, when you're dealing with margin like me, you want performance, because if you're underperforming, well then if we have a down market, yes, your dividends might get paid back, but your equity level will fall so fast that you'll be in a margin call. Okay, the way I use margin at this channel is with the indexes and with low maintenance names. Okay, and that's the first problem with TSLY. Okay, if you go to a maintenance tab of TSLY, first of all, Microsoft, it's 30%. Okay, now keep that in mind because that's one of the funds I wanted to discuss tonight, but TSLY is 50%. And this is the whole secret to living the FIRE lifestyle. If you need help understanding maintenance, that's in my Volume 3 e-guide. So TSLY, it's 50%, Microsoft is 30%, and it's almost 10% of the Nasdaq. Okay, if we go here to a chart of Microsoft, to the holdings of, let's say, not only the Dow, okay, Microsoft's a huge component of the Dow, 6.5% of the Dow, but if we go to QQQ, we'll see that Microsoft is about 10% it's 9% now, along with Apple, which is 9.5%. So this is why I have so much in Microsoft and Apple, because they're such large parts of these indexes, but also the maintenance is lower for Microsoft. Okay, this is how I keep all my equity preserved, and TSLY's maintenance is high. Now, if we go to YMAG's maintenance, just be aware that here, the maintenance is also high. It's 50%. So it's not like you're getting any lower maintenance with the safety of Yieldmax, which is unusual. You know, it's a bit strange. But that's just the way that E-Trade evaluates the risk for Yieldmax and TSLY. Now you can go to other brokers who have lower maintenance for Yieldmax and TSLY, like an Interactive Brokers, but they might not have the special drip for Cornerstone. Cornerstone is what I have 400 grand in my account. This is what I get. This is where I get most of my income. It's Cornerstone. Okay, it's 4 stars and it beats the indexes if you watch my past videos. And Cornerstone, it has 30% maintenance as well. And not only that, it has a 21% dividend at its NAV. And, you know, it shows 18% here. But I drip my dividends down at the NAV every month for free money. Cornerstone is the only fund around that actually takes its 21% dividend. Now it's 18%, 17.9, and it drips it down at the NAV, at the true value, not up at the market price like everyone else, like Defiance and Yieldmax, but down at the NAV. Okay, so I get free money from Cornerstone every month. That's why it's 4-star rated. All right, and that's why I have 400 grand in Cornerstone. But you just have to learn how to play this fund properly. That's in my Volume 4 e-guide. Funds like Cornerstone, closed-end funds, Gove, Cornerstone, Riv, they have rights offerings, okay, and you have to time them around their rights offerings. When you buy my e-guides, you get free access to the Discord chat room for life, where we alert you of the rights offering announcement for Cornerstone. We have a Cornerstone rights offering announcement section here somewhere. I also have my Fire portfolio here. This is where you track my portfolio when I'm not making videos on YouTube. Cornerstone discussion section. Okay, so we have almost 1,000 members in this Discord chat room pursuing the FIRE lifestyle, and they can help you answer any questions that I can't answer. Because when you buy my e-guides, you do get free access to Discord for life and my phone number for life. And so this is where I help people negotiate down their margin interest. I've negotiated mine down twice. That's why I have about 6% interest. So the dividends that I earn are, you know, the interest is negligible compared to the dividends that I earn. All right, so anyway, that's the benefit of you know, owning Cornerstone. You get the special drip. You also get growth out of Cornerstone. It averages 20 to 30% premiums per year, but it you know, you have to it resets after the rights offering, so you have to time it again properly around the rights offerings, and that's why I have so much of my money in Cornerstone, the low maintenance and the special drip. Okay. So the second reason why I think that TSLY is becoming obsolete is, for one, not only can you switch to YMAGs and FEPIs of the world, which also have less decay, and I showed you, I alluded to the chart of Microsoft. Look at how Microsoft is not only 30% maintenance, which means that I preserve so much more of my equity, and that's the key to staying out of a margin call. See, when this number gets to 0, you're at a margin call, so I can withstand over 20% corrections and withdraw freely out of my E-Trade account. Okay, I use my E-Trade credit card to go wherever I want in this world. I swipe my E-Trade card wherever I want, and I also pay all my bills out of this account. It's all automated. Okay, it comes out of my margin debt, but then my dividends pay it back. Okay, but this number has to stay you know, above 0, and you want not only to be able to withstand 20% corrections, which is why I tie my investments to indexes and why YMAG is a better suited investment vehicle for me than a TSLY, because it's stock driven. Stocks can fall by the amounts of the stocks, unlimited. Indexes fall 20 to 30%, you know, in a given year on a down year. So this has to stay above 0. All right, and you have to have the ability to withdraw out of your account. So even if you're not using margin, okay, maybe you just want to sell options against your account. Maybe you just want to spend out of your account. Well, if you do that, you siphon all of your precious equity out of your account, and it's hard to live the FIRE lifestyle that way. So maintenance is everything, and Microsoft is 30% maintenance, and it doesn't decay. Look at this on the chart. It's less volatile, so it doesn't decay. But if you go to a chart of TSLY, you'll see that it's more volatile, so it decays a lot more. Now, the stock price of Tesla is down, so that's why TSLY is underperforming. That's not why I'm saying it's obsolete to me. What I'm saying is it's a highly volatile vehicle that has a big dividend, but guess what? That brings me into my next point. Now we have Defiance, okay? Defiance funds are now around. Not only do we have alternatives with FEPI and YMAG, perhaps even the QQQI, but we also have Defiance funds now, okay, which are performing pretty well for me. And, you know, I've been outperforming with Defiance funds. They have huge dividends, you know, 60% dividends or so, and they're just going sideways. You see on this chart, the decay is not that bad, okay, especially if you're reinvesting around the lows. So I'm really enjoying my Defiance funds. They give me the income that TSLY, that I lose from selling TSLY. So I've really reduced all of my Yieldmax names, okay, to such a small amount they can't hurt me. And TSLY is one of those names. Now, before I used to like TSLY, and I still like the idea of TSLA. It's just that now that I'm a dividend investor first and foremost, and I want qualifying income to banks, and I want to outperform. Well, if I'm with the indexes, I outperform. TSLY and TSLA, you can't outperform. You can't guarantee that. And then I have a place to get higher income elsewhere, okay? We have other funds. There is an alternative. Tina, there is no alternative. Well, now there is an alternative. There are Defiance funds. They were always around before. It's just that I was waiting for them to prove themselves. Now they have proven themselves, okay? So that's the key with Tesla. Not only do we have alternatives to invest in to still get your, Mag 7 exposure, to get your hyper growth exposure, but you also have other high yielding dividend vehicles that you can replace that lost income with, okay? We also have, the TSLSs of the world, the TSLLs, TSLL. So we have other alternatives for investing in Tesla with minimal money. You could buy a $5,000, TSLY position, maybe augment it with some TSLL and maybe 1,000 TSLL and 500 TSLS, and that way you have like a fancy straddle or strangle, and if we lose in Tesla, you have some recourse with the dividend from TSLY and TSLS, and if you win, your TSLL will definitely benefit. All right, so we have these alternatives as well, and honestly, Yieldmax doesn't get the performance that you really want in an up market, okay? You don't want to sacrifice some of this hyper growth that we're getting just for the sake of dividends. I mean, look at Coney, okay? You can get those same dividends in Defiance, right? The same dividends. So why not get growth where you can from the indexes, or get your dividends from a Defiance. Like, look at Coney, okay? It didn't make it back to the old highs. It decayed here, whereas Coin did make it back to the old highs just recently. And so that decay hurts a lot. See this? It made it back to the old highs, Coin. Whereas Microsoft is decaying less. So it pays to be in these Yieldmax funds that are less volatile, okay? And that way they decay less. And so yet you can still get your performance if you not only buy the YMAGs and the FEPIs and maybe some TSLL or something, but you can also get your performance simply because I use margin, okay? Because I use margin, that's why I outperform. Now you think in a down market I'm going to get hurt more, but the truth is all of my debt will disappear in less than 1 year approximately, okay? I have recourse plans too for, when the market falls, to lower my debt significantly and increase my income significantly, but we'll cross that bridge when we get there. But for now, I mean, I'm just collecting my income. I'm outperforming the markets, and I'm outperforming with not only indexed exposure, but with margin. And then if you think margin is a risk, well, then my dividends pay back my debt in less than a year. So, and this doesn't show up on a credit check, so there's really no risk to me owning this. My interest is minimal. So my leverage disappears and I'm just left with a large account. After your debt is gone, your account grows by that same amount. So my account will be at 700 and something thousand and my debt will be at zero. Whereas if you pay back a credit card, it's just at a zero balance, you don't grow. But with the brokerage account, you build your equity up and you do grow, okay? The last thing that I wanted to say about, let me make sure I have my notes here, right? Oh, yes, okay. The last thing that I wanted to say about Tesla is not only that, but not only do they have TSLL and TSLS, but you can sell puts, okay, on Tesla, but it's too expensive of a share price. So I sell puts here on Ford. This is how I still get my EV exposure. $500 for selling this put, no big deal. I sell a lot of put options here. I get thousands of dollars just for clicking the mouse, okay. And even IEP, like $60 a share here, but I got $4,300 just for clicking sell, just for clicking the mouse. And so I'm up in the position, even though the 60 strike price, you would think I'm down, but you have to do 60 minus the premiums. And so anyway, and you see that I actually have a lower cost basis. With Ford, that's how I'm controlling EV exposure as well. It's it's through Ford, and then if I want my growth, I'm getting it through the FEPIs of the world. Also OARC, OARC is 10% of Tesla is 10% of ARKK. So I've been going back into OARC, all right, and it has Bitcoin exposure as well if you're looking for growth, but it also has a large percentage of its holdings in Tesla. See, 8%. It used to be around 10%. So there are alternatives now to owning a Tesla. That's why That's why it's becoming obsolete to me. And not only that, but I have better maintenance vehicles that I can go into, like a Cornerstone, that gives me the growth. TSLY, you have to trade around the growth, just like Coinbase. You have to trade around those, and the gains are fleeting. So I'd rather put my money in nice upward left or moving right charts that give me the growth along with my dividends. But again, I get more growth and outperformance because I use margin, but you have to learn how to play margin correctly, and that's in my margin e-guide, my volume 3 e-guide. So when you buy my e-guides, again, you get free access to the Discord chat room for life, okay, and my phone number for life. Okay, and also you can follow my portfolio. I'll link it in the description below and the comment section. Okay, if you want to see my portfolio and how I'm outperforming. Okay, most people buy my e-guides, then they get Discord access, and then they call me if they have any other final questions, and then you follow me on the fire journey forever after that, as long as you want. Okay, we're in this thing together, trying to reach financial freedom together. All right, so I hope you like the video. Okay, if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.